Yeah. All right, so let's get going then, right? We good? Oh, Google. Google really is up $100. Impressive, Google. It's been the year of Google, man. This thing's been, if you remember, this thing couldn't get out of its own way. Remember when the rest of Fang was going ape shit? It's been Google's turn. Wow. All right, let me lower this stuff and let's get. All right, so I figured we watch a little earnings reactions, and then again, this is more. If you remember, you already know this. We've been preparing for this week, and most of you on Twitter are aware of it as well. This has been a week we've been anticipating as kind of a try not to do too much week. Trim profits if you have them, at least roll them out. Be willing to give back some profits if you're going to stay in some stuff. We were fortunate enough that some of the names that we did play, the underbelly stuff, got attention right before this week. Otherwise, we probably have peanuts to scrape before this week. So we were fortunate enough there. And I mentioned to you guys, I got into basically an all cash position. And that's just my personality, my mentality more than anything else. I'm an all or none type dude. Once I start buying, I like to get aggressive. Once I start selling, I don't want anything, because usually there's a reason for me to start taking that activity, to start taking that action. But it's not because I'm uber bearish and expecting a crash. Quite the opposite. From the stuff I'm looking at, we spoke about, crash anything more than just a quick wash is, I really don't see it right now. I really don't see it. But we are, I hate the term, but quote unquote overbought, right? Positioning is full, as it should be when a market is overbought. So they can definitely shake the tree a little. And you got catalysts this week, right? You have big earnings. You got the Fed. You got a lot of different balls in the air that could create some profit taking or some nervousness out there to take some chips off the table. So that's why I wanted to do, no selling, because I'd rather be in a cash position if they do that and not worry about the earnings risk that's coming up anyway, whether or not the Fed is a non-event or not. You know what I mean? There's no reason, earnings season, I don't like to really carry too much stuff anyway. I usually go into predominantly a cash position. And the other thing on top of it all is, I get quite excited for post-earnings flow because that's where some of the real buying comes in. That's where a lot of the clean action comes in. So I can have that conviction and that confidence to buy something and not, worry about, do I got to get out of this thing before so-and-so. So I like where I'm at. Like I said, fortunate enough, a couple of those names, especially like a VIPS, I didn't anticipate seeing a move like that quick. There was time on those calls. So I was kind of lucky to catch, we were all lucky to catch that move over a short time span in a market that hasn't been, up until the last couple of weeks, hasn't really been too, much to talk about, right? It's been a tough game in individual names. So whatever the case, all right? So that's basically where we stand coming into the week and coming into the day. What I wanted to talk about today is we'll talk a little bit about where things line up so we can get ready, post FOMC. And this is what we probably have another week of earnings, right? You have this week and then next week. Not to say there are other names reporting after that. But that's usually the high market beta, where you can have a significant market impact. It can have an effect on the market. Can have an effect on the flow. Usually this week and going into next week. Sometimes earlier, sometimes a little later. Take the full week. Then we have enough names out there that have reported their numbers, and we can really start to pay attention to the earnings action out there. We're already starting to see earnings flow. Okay. The problem with it is what the noise around it, right? So you have to make a bet in the middle of all the earnings coming up here with the FOMC, which can, negatively or positively affect the early stages of that bet. Okay. And if you can avoid that, that's ideal. But an example like Freeport FCX, things been consolidating. They came right after earnings and they started buying it up again. Now if that had, a nice dip off earnings, it would be even more ideal, So that's what I'm looking forward to as we come out of this and hopefully get a clearer picture of what route rotation may take, coming out of this earnings season. And that's another thing post-earnings flow can provide. Some early clues, are they going back into growth aggressively? And is that, something sustainable? Are they going back into cyclicals? Right now, nobody has a clue. Nobody has a clue. Everything's been seen buying. Everything. So you really can't even make, you can't make much of an educated guess on, where the money's going to go into coming out of this earnings season. It's going into everything. And luckily, there's been some momentum over the extreme short term in almost everything. So, you can benefit off that tactically. All right, so we'll go over some of the stuff. The BOVA client fund flow came out again. I'm always interested to take a look. I saved it to take a look at it with you guys, see what hedge funds are getting in and out of and that sort of thing. And then we'll look at the usuals. We'll start off there as far as Goldman Sachs indicators and all that jazz. And then we'll talk about, names and what you guys are hoping to see or already seeing as far as earnings positioning. All right, let me pull up the Goldman stuff. We'll start off there, as we usually do. Hold on. And it looks like, that's another thing, like there's even the Goldman indicators are, this is it, April 27, yeah. So the same thing we've been seeing here. Now, gradually, we're starting to see more and more of these current diamonds, which are the dark blue, start to shift over this way, right? Little by little, each and every time we take a trip to new highs, there's another blue diamond that's capitulating. And what I mean by blue diamond, it's all the indicators they follow here at Goldman. Well, a lot of these things we follow as well. All right. What has been interesting throughout the bulk of this rally is, from time to time, a lot of these momentum, option, shorter term tactical indicators have light up caution. And then we get a timely, quick wash that, brings them all to at least back to neutral. So we're here again, as you can see. And they took a couple others with them this time around. This one made a big move here. This is the yen and gold futures. So kind of defensive positioning. Defensive positioning would be players are nervous. If they're not positioned defensively, they're feeling more bullish. So that's what that's telling us there. All right. So you can see on the bottom, you got a few of these that still have room. They still have room. All right, and that's what we've been seeing for a while now on a lot of these things. The dark blue is current. The light blue is where it was 3 months ago. and the orange is where it was a month ago. You know, I'll post this. This I posted in the room and on private Twitter pre-market. I'll post it on regular Twitter as I usually do when we get out of here. All right. So no big changes. Just again, you know, we nudged a little bit over to the right, net because of some of these tactical indicators down here. All right. Here's the other stuff. I'll post it so I remember as we're doing this. Oh, you know what? Let's look at this while I'm doing that. Yeah. Let's look at the BOVA thing. So here you've had, you know, clients start to position defensively, you know, over at BOVA. Broad-based selling, clients were net sellers, $2 billion of U.S. equities for the second week in a row. So they're not all bulled up. But interestingly enough, retail were once again the only client group to actually be a net buyer. You know, that's fascinating. And we'll talk about retail too, because retail is not, you know, right away we hear, oh, retail is getting long. They're not getting long in the magnitude they were getting long when we were really nervous back earlier in the year. They really have hit the brake. A lot of retail got flushed out of this game. They got flushed out of this game. So, you know, we can't get the same vibe when we hear retail's buying, but everybody else is selling. But, you know, that's basically what BOVA has been seeing. You got retail, the only net buyers out there. They're private clients, right? So the clients who actually know the game, they've been net sellers for 2 weeks in a row, a decent amount. Institutions, they keep selling. Okay, they've been selling and they continue to sell. So they've been wrong for a while. A lot of people look at that in the contrarian way, saying that leaves some ammo on the sidelines because ultimately this market's going to reach a point where they get in, right? So a lot of people are looking at it as once the institutions start getting in and they're fully invested, then you're going to have a problem because there's no ammo left. But they have had no interest, institutions, doing nothing but selling. Buybacks are back in play. You know, for a while we had, right, especially like the banks and all, buybacks were gone. So they're back in play. So that's another reason probably all these dips are going to end up getting bought. More defensive positioning. They're selling cyclicals. Remember, they were all in cyclicals. So now they've been starting to sell them because they've kind of run into a wall, right? When they were all excited about them. Clients bought stocks in 7 of 11 sectors. Oh, let's look at that. It breaks it down nicely. So let's look at that quick. Should we start with this? All right, so you got weekly flows by client, sector, and size. Commercial services and fins. So financial commercial services is what they sold last week. Here, selling was driven by hedge funds. So if you remember, hedge funds were buying, and then we saw off that Biden headline, that Biden tape bomb. It was all hedge fund selling. All hedge fund selling. So they did some selling. You can see here. So the majority of selling was all hedge fund and institutions. All right. Outflows driven by large caps. That really doesn't tell me much because large caps are usually dominate these guys, their positioning anyway. Weekly net buying by sector. Again, this is all in market updates. You son of a gun. And private Twitter if you want to take a look. I want to go to the other one, which is Here we go. Can you guys see that, or I need to blow it up? You guys can see it, right? So hedge funds, this is at BOVA, okay? Just at BOVA. They've been selling since late March, so recently. Institutional clients have been net sellers. They've been longer than March. They probably screwed it up again. Let's see if we can see that. I can't blow it up. But you can see here, they've been selling all year, institutions. Private clients, they were buyers, net buyers since late February, and have done some selling the last couple of weeks, but nothing major. Institutions have been selling throughout, and hedge funds were sellers last week. Here are the buybacks on the bottom. Look at that buyback spike here this year. Wow, look at it over here. You guys see that? And usually they buy into weakness, but they've been off, right? They couldn't buy back for a while. Buybacks went dry. So now I guess they're buying into strength. Usually they buy into pullbacks. Look at that spike. Amazing, huh? Nobody's been talking about that. Unless, I haven't heard anybody really talk about how buybacks are a big factor again. This is the one I wanted to show you guys. Hold on. All right, and this I like to see. So here's the sector stuff that they fooled around with. Staples saw the biggest inflow from hedge funds and consumer discretionary. So this is as defensive as you're going to get from from hedge funds last week. They went into defensive stuff and they got out of more of the cyclical stuff. They sold consumer discretionary the most, financials, industrials, energy, which they loved, right? So they did some trimming there. Was concentrated in large caps. Again, that doesn't tell us much. Healthcare saw the biggest inflow, financials, the biggest outflow from institutional clients. That's defensive as well, right? Can't get any more defensive than that. So they went into healthcare and they dumped everything. ETFs, financials, consumer discretionary, commercial services, they dumped everything. Interestingly, tech is like hardly even on it. No action there. And tech saw the biggest inflow from retail clients. Private clients. Tech saw the biggest inflow from private clients. Financials saw the biggest outflow from private clients. So what do you guys think? Anything stick out? They're a little defensive. The pros have been a little defensive the last couple of weeks, right? Anything more than that as far as sectors? You guys see anything that I'm missing that we just gone over? Nothing really got you jumping out of your chair, right? Yeah, defensive. They've been defensive the last couple of weeks, but that's a good segue. Let's go into now the other stuff we look at, and you could see why it's tough to get too excited about that. All right, so let's look at this here. This will give you a good idea of where we're at. And, it's kind of no man's land in a sense, especially going into a noisy week like this. All right, so here was the hedge fund exposure. By the way, the red and green lines, me and my couple buddies that we look at this, we come to the conclusion, I threw them out, okay, because I don't know if they've been moving them around on me, but they're really throwing me off whack. And me and a couple of my buddies came to the conclusion that it's a much cleaner read without those red, bullish and bearish lines on them. I know a lot of you like it, but, I'll put them on there when you guys are looking at them. But I see it much better this way, okay? So here are where the hedge funds are, okay? in comparison to in years past. Okay, so here's zero. Under here, they're net short. Okay, very easy read on this. Zero meaning they have no net exposure to equities. Here they're net short, and anything above it, they're net long. Obviously, when they're extremely high above that zero line, they're more long, right? So this is where they're at now. Okay, in comparison to where they were in years past. All right, so you could see, right, that this is more like how we were looking at it prior to, prior than something changing on here. I don't know what the hell got switched around here, but it really threw me for a loop. All right, but anyway, that's water under the bridge. They are long. Okay, not to any significant extreme, but they are long. Okay, and I would like them to get flushed out. The Biden tape bomb did a little flushing, right? The Biden tape bomb flushed them out a bit. And if we get a little bit of selling off out of this week or so, just shake the tree a little bit, maybe it'll shake them out some more. Bova, they've been selling for a couple of weeks. So that would be a good sign. If we ever get this back to, zero or God forbid net short, that would be ideal. That would be ideal. And not to say there wouldn't be some market weakness involved, but what it would tell us is when we do find that window to get long out of that market weakness, we'll have a nice floor there. You know what I mean? Hold on, I gotta knock Jules upside. Jules, now you stay out there. All right, I gave Jules the boot. It's amazing. She's dead asleep all day. She wakes up for these webinars. She gets pumped up, I guess. I got to kick her out from now on. That's all. She crossed, you give them an inch, they take the whole football field. You got to put your foot down sometimes. All right, so that's where we're at, hedge fund wise. Anybody have any questions, right? Makes sense? All right, you see what I see? You see what I'm talking about here? All right, so they're long, but, not where we got to all poop our pants and go into our bunkers, but, wait for a little yank. Yeah, why not? How do we know the top, though? How do we know the top of what? What do you mean? The top of this chart? The top, you're talking about here? Like, how do we know if it's a high reading? Yeah, well, look in the past, right? Like, you see this caused problems, this caused a little selling there problems, right? So, like, for me, if you wanted to use a line right here, and I think that's where the line was before Sentiment Trader changed it, or did something. I still don't know what they did. But that's where, their selling will likely have a big impact on the price action for more than a couple of days. You understand? That's where, like, significant margin calls, all that stuff, that's where it could be a problem. Right? Like, all in, when you say they're all in, like, you can see, right? Like, just even the acceleration behind it. Like, this is an all in reading, isn't it? Right? You see the difference between that and up? Oh, no, market's going down. Oh, let's get long. No, let's sell. No, let's get long. Let's sell. That's not, is that uber bullish all in? This looks like all in, no? Less than that, but aggressive. Right? Even this here, it was more of gradual from the bottom, but you could see like a little acceleration, right? Didn't lead to a complete debacle, but you could see their selling had an impact on the market. right? Even this wasn't as high as some of them, but their selling had an impact, right? So that's, that's what I would look for. Like if we see a spike above here, right? If we see a spike like that, not even that high, I didn't mean to go that high, but you see a spike like that shows some aggressiveness behind their buying, then I think you start to get concerned about it. I don't think it's a major problem off this indicator, but I could be wrong. Again, it's just my opinion. Now, don't get me wrong. I would love to get them, especially now that I'm in, a nice cash position. I would love this thing to come back down to zero. And I think that's what I'm most excited about where it is right now, is that if there was a little selling, this thing's not that far away from them having nothing again. So, but the hedge funds have been a mixed read out of different outfits. Like Goldman has said from time to time that hedge funds have been aggressive buyers, but then they became sellers, right? Same thing with Bova. Like it's just been different reads. They haven't been all in. All right, but whatever. We don't want to spend too much time on that anyway. We know positioning is a lot more full than it's been. And hedge funds are long, right? They're long. That's basically the takeaway there. Here's what's interesting on the retail end. Sentiment Trader had a whole write-up on this yesterday. So look here, right? Like when people hear, retail, they're buying everything, this, that, the other thing, you would have this going in this direction. They got smoked in their calls, right? They got smoked in their CCIV calls. They got smoked in their GameStop calls. They got smoked in every SPAC under the sun, in Kathy names and everything like that. So you could see there's a different tone out of retail there. Not in a bullish extreme way. Okay. It's not, don't get me wrong, it's not firing bullish signals for us, but it's better if we're worried about retail and we're concerned about it. I feel a lot better about this than what we were seeing. All right. Because historically, and, you could say because of Robinhood and Webull and all these things offering options, of course, historically, there's going to be more call buying out there. But, here, like you could see, this is option speculation in general. Right? And you can see it got, pretty elevated. Again, you can make the case, Robinhood accounts and all that after COVID, people staying home, that was the dominant driver for it. So it wasn't even necessarily a signal of caution anyway, but you rather this happen anyway. You rather have this, okay? You rather have them chilling out, losing interest. They're losing interest. Where they left, they went and they're buying Dogecoin and NFTs, whatever the fuck they call them. What are they called again? Non-fungible. What's fungible? What's fungible? What the fuck is fungible? Somebody tell me, please. Non-interchangeable? I swear to God, honestly, fungible. The word fungible. I thought it was spelled differently. Like, okay, you're going to laugh. Like fudge. Call me a moron. I really had no idea. Knowing that crowd, I have no idea what the hell they're, you know what I mean? Non-fungible. Havana. Okay, so whatever. That's where they went there. Maybe they come back here if things heat up eventually. It's possible. All right. But retail, not as big as a concern as they were. But, here, this thing I think gives it good color. Okay. Like retail, this is generally from the 2009 start of the rally till now, right? You could see, there's been an increase in speculation. But now it's going south. Havana. All right. So I just wanted to show you guys this because a lot of times we hear the word retail. Listen, I don't want you to get the wrong impression. There's no bullish signal out of any of this. You know what I mean? There's no bullish signal out of any of this. I wouldn't have gone into cash this week if everything was lighting up bullish, but I'm showing you guys what I'm looking at to determine whether there's an all-in scenario that can create some significant selling out there than just a run-of-the-mill pullback, which we would all salivate over, which we would all salivate over. All right. So I'm not seeing it. All right. Here's what I am seeing. That's a little pain in the rear end this week. All right. And especially going into earnings season. Yeah, I'd rather roll the dice and wait for a little breather for something to free up. And this is something we've been talking about a lot recently, okay? So here are the sectors, right? It's been really weird out there. It's been really weird out there. Up until recently, like we just started to see it again yesterday and today, right? A little divergence between certain groups. But it went away for a little bit. And I think that's why certain stocks were doing well. The stocks were participating again. Breath had a little spell of awfulness, and there wasn't any rhyme or reason for whatever sectors were going up that particular day. Nothing. It just was so random. And this is what it created. It created every sector in its own world, kind of, both in price action and sentiment. All right. We saw a little more correlation. We got excited, right? So the more correlated things get, meaning the more things will move up and down with the market together, the more cleaner the sector sentiment readings will get. Okay. But you can see here again, it may not be all bearish, but there's nothing really to get excited over. The only things, right, we were talking about, you got energy. Well, one of them's there. Well, let's say right near bullish territory. Okay? So you got energy right near bullish territory. That's the one group that has set up over the past couple of weeks. All right? You got materials, no technical sell signal yet, but close. Biotech has had a really nice run off that buy signal. Healthcare, they were thrown out the window a couple weeks ago. Now everybody wants healthcare. Financials, they're getting to neutral anyway. They're trying to wash out some of this heat. Housing, same thing, attempting to wash out some heat. Industrials, right? That's one we were looking at for hopefully washing out some heat. It's just been it's been in slow motion. Slow motion. Semis, yeah, look how this was pretty, right? Were you guys surprised by that? But when I looked at the chart, like the price action, it wasn't all that surprising the way temperament is out there right now. Yeah, exactly, Rye. It had downside niner. So meaning that there was, no selling for 9 days there, right? So it really cooled them off nicely. Tech, a little less so because you had the big guys holding them up. You had the big guys holding them up. So this is the pickle. Okay? This is the pickle we're in right now. So think of this, right? The ideal setup would be you get all the high beta groups near close to buy signal. Okay, that's the ideal. They would all be in buy signal, right? So that's the ideal bullish scenario for us. The total opposite of that would be everything at a poor risk reward signal. Okay, so those are the two stronger signals out of this. This is somewhere in between. You understand? So how do you get a gauge, especially going into earnings season and an FOMC week to boot? It's really not a clean picture. Right? It's really not a clean picture. The only thing that has some clarity is that energy is set up. Again, there could be a little more downside, but that's probably buyable, right? If you like, especially if you like energy, like you would want to buy that with a little time. But the other ones, you're not close enough yet. Financials, you got some downside if they want to cool off further. Healthcare, forget it now. You had your chance, that's gone. Ding. Semis getting there, but even this little room here, that can hurt if you're early. Tech, you got a room. Utilities, oh my God, forget that. How the hell did utilities do this? Anybody follow utilities close enough? From a screaming buy to scorched. Utilities? Jesus. If you told me, I would have never, I didn't see that anywhere. The home builders, housing, if you get caught here and they want to cool these things off nice, that's a beating. Industrials, you understand what I'm saying? Yeah. That's the problem, Peter, That's the problem. But listen, for me, I give myself credit almost to a fault that, Peter, that I've been doing this so long that I'm patient enough to wait. And if it doesn't come, it doesn't come. You know what I mean? Because I've been burnt trying to be too early in the past. You know what I'm saying, Peter? Even when I'm bullish on a group, it's been worth waiting for, to get closer to that ideal signal. Because again, unless you're willing to be early and get your hands burnt early on, Yeah, well, you got some time there, so that's okay. You got some time. But if you didn't, right? If you didn't have the time, you'd be in bad shape right now. You'd be miserable. So that's the thing. That's the thing. But it's good you have some time. So, I'm the biggest degenerate in the world. I can't say I'm a reformed degenerate. I'm an improved degenerate. But I came into this life evolved. Yes, I evolved. I was once, like many of you, even worse, but I've evolved. From ball games to horses to stock, anything I could put money on and lose it. So I come from that background. But, a lot of degenerate gamblers, they like to lose money. They don't like to admit it, but they like to lose money. The action, it feels good. That rush is like smoking crack to them. They know it's bad, but they like the feeling anyway. Me, I didn't enjoy losing. I was miserable when I lost. So I could get over it. I got over it quickly, I got over it quickly. Soccer, I played soccer. I used to gamble soccer, not knowing what the hell was what over there. The English Premier League. Just because I liked the crowd was nice to watch when they scored a goal and you had some money on it. All right, back to non-degenerate speak here. Okay, so you guys see what I'm saying here, how it's a difficult read. You got some things to keep an eye out for, and that's what I would suggest going, through the next week or so. Keep an eye, let them set up, let them set up. If you're looking at, making a particular sector bet or something like that. Let them set up, or even getting aggressive in a couple names in that group. And, I like to look at this as well as the sectors to get a gauge on just the markets as a whole. Okay, these are world markets, all the world markets. Now, they don't have to all move in sync, right? They don't always do. But, usually you get a nice read. What happens is at tops, a lot of the globe is scorched. They all are scorched. Just even your run-of-the-mill tops that you get a nice correction out of, okay? And at bottoms, these are all lined up the same way, right? Off a pullback, you'll get bullish signals on the majority of them. I don't know where we're at here. You know what I'm saying? I have, China could easily see some rotation has been out of favor. Remember EEM we spoke about, what was it, a week or two ago? Being like a pain trade? Everybody got out of EEM now. Nobody wants EEM. The whole entire world wanted to be long EEM over the United States. That's how bullish they were. All kidding aside, many of you probably know, right? Everybody and their mother wanted to be long emerging markets. And they got shaken out. They're done. Now, now there's been a little rally to neutral off that. But that's been a pain trade. Everybody got out of it. All right, so that's not cooked by no means. That's not cooked. Brazil off a buy signal, heating up, right? That's approaching, but not cooked yet. Australia, who really cares, but not cooked yet. Canada, neutral. France, that's a sell signal there. Germany had one, cooled off a little bit. India, mayhem, right? India, you can't get much worse than India right now with COVID. You got a buy signal there. So that's not cooked. You understand what I'm saying? It's not, the whole world's not cooked here on the upside, as you would think it is. Yeah, forget it. COVID, crazy. But I heard a lot of money starting to move its way into India. I read an article on Bloomberg or something, buying some stuff up cheap there. Because I guess the vaccine and all that stuff, right? Well, jobs. Italy, neutral. Japan, that's usually the first one to get heated. It's a rigged game there. Rig market, Japan. You think we're rigged? Japan, rigged. Neutral. That's not even hot. Mexico has been strengthening. Russia bounced there, strengthening. Spain, neutral. And the UK stuck a little above neutral. Twice as rigged, you're right. All right, so again, similar to sectors, guys, if I'm nervous about, too much heat out there, kind of, and I really thought coming into this week, we would get that heat because we're still in technically a melt up, aren't we? I mean, this is considered a melt up, no? There's no pullback or anything. Look at this. So I really thought, right? Here was the Pink Panther, right? That was the first caution flag to go up. And if you remember, I made the comment that if we just continue running from here, we're gonna have issues, obviously, because everyone is gonna be all in and everything's gonna be cooked, right? That's what normally happens. But this right here, this, whatever you want to call it, that wiped out Pink Panther, almost was like a quick reset, not to bullish, but to neutralish. And, allowed this to not look as heated as we thought it would be. That's generally what it is. You understand what I'm saying? Or did I lose you guys? So positioning is full, sentiment is bullish, but it's not at that extreme that I anticipated it would be without a decent wash, So that's what I mean by no man's land, okay? That's what I mean by no man's land. And that's kind of, that's the tricky part here. Now, if we rally off the Fed, or this week of earnings, right? Let's say we break out higher from here. Chances are we're going to get heated, right? That's what's going to happen. But if we get a little breather here, there's a lot of good that could come out of that because we don't need too much for something to line up, for something to line up, right? Energy's close. You got a couple things that if you get a down week, you'll have some stuff that looks good, and we start to see some post earnings flow. Something can line up. So that's why I wanted to raise cash, so I can get to a place with more clarity, and I can feel better about it. That's generally my outlook on all this shit right now, because it's just not clear. This I think tells the story of why you may feel that we're more overheated than we are, overbought, right? Things have gone a bit stretched without some sort of pullback. And that's what you see here, right? The only things, again, energy is the only thing even close to green. Everything else, these are subgroups. They're all at or approaching overbought territory. So another thing too, if you guys are wondering, another thing I pay attention to that to keep an eye on whether there's a significant sell-off is even a high probability of it. If selling shows up, is gamma and positioning in SPX, right? Because the whole gamma premise out there is that accelerated sell-offs, right? Those big sell-offs are usually when SPX put sellers are caught offside. Okay, and it's still not there. It's still not there. I have gamma too. What do I do with gamma? Oh, here's gamma. And this is another thing that's not where it should be. Right? Like if we were up over here, that could turn into a problem, obviously. We're already here. And, we're not down here where things can get really volatile over the short term. We're still at a decent number. This is gamma spike, gamma exposure. We're still at a decent number to where they're buying dips. So it's going to have to be basically what all this means is that it's going to have to be an orderly sell-off. It's going to have to be an orderly sell-off. And that could be just as painful if you're in calls. You got to understand that, right? You got to understand that. it's almost comes down to the same thing. Like people are worried about a crash when they're in monthly front month calls. It doesn't matter. You could go sideways and your calls go to zero anyway. So what the hell is the difference? You know what I mean? So that's what the odds are, is that it's going to have to be an orderly selling, you know, low probability of something cataclysmic. I tell you, the Gamma Gang, they're looking to short the VIX on any legitimate pop. That's what they're waiting for. They don't think you could short VIX here. You know, there's not much downside from here. It's not worth it. Not that there's not much downside, but it's not worth shorting the VIX here. It's not worth shorting the VIX here. So they're looking for a pop in the VIX, and that's where they would short. And, you know, that's ultimately, this is the VIX. Is it the VIX? What did I type in here? No, that's not the VIX. Here's the VIX. What the hell am I typing in there? So here's the VIX. You understand? Like it's not worth shorting here, but you get a little poppage. Like we get them time to time. Look, some of them couldn't even last a day. You get a little pop, and that could be it. Yeah, but the positioning, it's the positioning in VIX, John, not the price of VIX. It's the positioning of VIX that becomes a problem. You understand? The price doesn't tell us anything. Like, in other words, are you talking about that VIXplosion event? I think that's what you're referring to, John, or no? That was the VIXplosion event where it was a big, I'll show you what I mean by that. Oh, that was 2018, the VIXplosion, man. Well, anyway, this is what usually leads to those type of events. Again, we could get hit with a nuke, and that changes the game, obviously. But I'm just, making the point again. Probability, right? Odds and probability. This is what usually leads to those type of events. Okay, you get players aggressively short VIX futures. Okay, so you would get a reading, down in this vicinity here. And yeah, exactly. They think it's free money. Just short the VIX. You can't lose, right? Because it just keeps melting away. Okay, look what happened recently. You see what they did there? They were shorting. And then here they did some buying. And the other thing, like the Gamma Gang talks about even more so than this, is in SPX, the put selling. Remember we were talking about that? The put selling in SPX. And right now it's not at a noteworthy amount there of selling naked SPX puts. And by them selling naked SPX puts, right, they show that confidence, that cockiness, that if the market goes down, it's not going to go down much, right? That's why they're writing naked puts. But, there's been periods of SPX put buying to hedge. So players are hedged. That's what it comes down to. Players are hedged. And when players are hedged, usually the markets don't fall apart. Again, you could get orderly weakness, orderly consolidation, and what's orderly? I mean, this market could go down 2-3% tomorrow, and that's not considered nuts. You know what I mean? We've seen that from time to time. I mean, the market goes up 2-3%, and then we act like it's nothing these days. But again, the higher probability that if we do get a yank, it's a buying opportunity than south. No, but we look at the stuff in front of us. There's no reason to even predict. Why is there a reason to predict? Right? No reason to predict. We look at the signals in front of us every day. They change week to week, and we see where we're at. You know, but again, my premise, just so I wanted to clear it up so you guys know where I stand, and I'm not talking at both sides of the mouth. You know, just going into heavy earnings and going to the FOMC, we were stretched. Positioning is fuller than it was. And, you know, we got lucky on some of these things. What'd you guys do with VIPs? Did you cash in, roll out? Those of you who owned it? Hold on. What'd you guys do? You cashed? Nice. Yep. And, you know, they got time to earnings in May, but who knows, you know, with everything going on. Oh, you didn't play the VIPs? Yeah, honestly, they forced me to play the VIPs. I had no intentions of buying a Chinese name. Me either, John. Me either. But, you know, they forced me into it. What'd you say, Sean? Did I miss the first part? Nothing unless the Gamma Gang feels an edge. What do you mean? Oh, yeah. It's not work unless it's protection, Sean, you know? Unless you're just using it as protection. And that's what I told you guys last week, right? I could have held my stuff like VIPs. I had August, you know, the TJX. What I have? I had a lot of time there too. But anyway, BGCP, I was supposed to hold that forever. I could have held all that stuff. But July, thank you, Joey. But you know, if I was going to hold it, I probably was going to put on some protection. So it was one or the other. You know, it was one or the other. You know, it was one or the other. And that's it. And, you know, ready for post-earnings action. Oh, you know what's been, it's happening because it's earnings season. That's another thing I wanted to talk to you guys about. Like, you see a lot of the names we like to play, there's been some nice movement. There's been nice movement in them recently. And, you know, it's because they've been heavily shorted and shorts are covering, protecting, sweeping calls, and it's created some upward momentum. You know, it'd be one thing if it wasn't earnings season and they were buying like they were prior to earnings season. They were buying just selectively what they thought were the goods, you know, like we were seeing with Nuon, Yeti, you know, that type of flow. That's one thing. Here, right, they're buying the dogs of the dogs. Like, I mean, Kodak caught some action. Space is catching action. Yeah, what I can't even VIPs, YSG, right? Everything that's been wiped out, CCIV, BB, every pig under the sun. So, you know, that there tells you that it's not real buying that's coming in. It's just, you know, look at the charts, you know. So basically you got this in space, right? All these chasers get caught and this thing gets slammed and, you know, shorted all the way down. So now you're all the way you're laying on the concrete floor dead here off a niner too. I mean, I don't know with earnings and all, but this thing is squeeze potential here. and earnings are like May 7th, right? Or something like that. And they're buying May 5th strike or something to that effect. And they bought a decent amount today. We'll look at the flow in a second today. There were quite a few names on the, now I call them the top earnings bets because it's earnings season, to make it clear. You know? But a lot of setups like this in where shorts either one want to cover some of it before earnings. Like if you hit this short, you're nuts if you're not hedging into earnings, right? Like you're out of your bird. So some shorts are going to trim. Some shorts who want to hold are going to sweep calls. That's what they're going to do. Not because they're bullish on space, but to hedge any squeeze off earnings. Right. Well, shorts are pigs, Jay. Trust me. They're pigs. You know? They build up, that's bears in general. They build up a bias and they want it to go to zero. You know, that's how they get burnt on all these things. And they pile on, they pile on, they pile on. They did it to GameStop. Remember that old shenanigans? You know? They're nuts. That's that bearish mentality. That's why it doesn't pay to be bearish. You know, it's like drugs. You know, you're bearish, you cash a ticket. That's the worst thing that can happen. Now you're bearish again, and you bearish again, and then you bearish again. And all of a sudden, you're coming in a full-fledged bear costume in the heat of a bull market. Not yet, Aisha. You know what I mean? So anyway, you guys get me in the bear rant again. You did it to me again. Right, Tesla, right? Oh, those Tesla bears. You know? No, we're right. We're right, damn it. We're going to short it until we lose all our money and blow up our funds. Their earnings are false. Yeah, we're just early. And they get crushed. You know? Kramer said it best. Like you have that too with like the Reddit crowd on the long side, right? They get out of hand, but shorts have been that way forever, stubborn like that. So anyway, this is what's going on here in a lot of these names. I played a little Wish equity. I got out of that today. That looks good, but you know, I had the equity. But same thing, see? I played YSG2. That didn't move as much. Probably can move a little bit more, but I sold it today. Yeah, this thing could probably move some more if it wants. This is Chinese, though. But that may be a good thing now. Some of the Chinese names are squeezing. But anyway, now, you know, you got the Fed and earnings are going to get in the middle of this, so who knows? But maybe next week you will have this this stuff still percolating out there, you know? You're holding it. Yeah, you probably get more squeeze out of it. I just, again, you know, I don't know with the Fed and all, that's your risk, you know? But these things have been beaten down to a pulp anyway. If we didn't have the noise that we have, all these things would be plays. Even the space, I'm telling you, the space could definitely move some more. You know, on that note, let's look at some of the top bets out there today. There was quite a few decent looking sweeps. Mosaic bombs. Now, again, earnings, but this thing was a torpedo. And then you had a June block. How much was that June block? 3 mil? 3 mil. You know, and Mosaic's a name that's caught flow from time to time. Nothing like this, but has had bull flow. Earnings 5.3. So what I would do, right? I know it's a corny, easy way out, but that's how I would approach all these things because it's worth a look. If they sell Mosaic off of earnings for whatever reason, okay, look for sweeper activity into that weakness if you like the name. Honestly, if you like the name that much, then you buy it off weakness and that's your entry without sweeper activity. Yeah, that's not something I would do, but for those of you who look at other things and stuff like that, I'll give you an example. Like this name doesn't catch enough flow because I was looking for it today, okay? MMM, Minnesota Mining. There's been bull flow, as you guys know, through this trip up. It just doesn't catch a lot of it, but there's been bull flow. And then here, look, whoop, earnings. And look how this thing traded back today. Wait, that doesn't even do it justice here. Oh, because it happened earlier? Holy cow, that happened all. Oh, no, there we go. So you know what I mean? So if you like the name, you can get a decent entry on it post earnings. Really? That's a strong name too, right, Stephen? Oh my God. Yeah, this name hardly ever catches flow. Wow. Same exact thing. Look at that. They bought it right up. Early in the day too. Early in the morning. They just bought it right back up. So that's how I would approach. And I think that's what's, usually we hate earnings season because it gets in the way. What did I just do? But I think this is the trade we have this earnings season to keep an eye out for. On these names. Wow, that was a niner too. Look at that. Niner high, sell off earnings, and they bought it right back up. And look at this rip. What a rip. And even if you don't want to hold on to it, they're nice trades. You know what I mean? They're nice tactical trades. So that's what I would look for, like on a mosaic that catches flow. Like mosaic is strong. Look at this. That's new highs. They report May 5th, so you may get a little tug. Sell on the news because it ran so much. Who knows? What else we got on here? TRQ. What did we say this was? A miner? TRQ? Miner. Yeah, once in a while, Joe, I'll look at them on the more active names. On the more active names. But not as much. I would see, here's the thing, like everything I play, Joe, is off of sweeper activity. So usually what I do is I buy, if there's sweeper activity, then I'll look. Make sense? Rather than the other way around. Usually. Yeah, I got a buddy of mine who does it the other way and develops like a watch list. But all my best trades are when the sweeper activity comes to me. I'm not looking for it. Like the VIPs example. The last thing I wanted to do was buy a Chinese stock. Like all of you. I really, and they swept it. I didn't buy it. They swept it again. I didn't buy it. You know what I mean? They tattooed it. And I said, I got to own it. I got to own it. Nice, Speed. Yeah, me too. Me too. So those are my best trades. Raw, right? Those are the best trades. Like the flow comes to you and it convinces you. And it's even better when you don't like, when the stock looks like crap. You understand? And here's the rationale behind it. I've thought of this in depth. When a stock looks good, yeah, I sold it. I sold everything, Stephen. I sold everything. Even the BGCP, I had a nice little position to tuck away. I sold a chunk of it. And I like that stock longer term. I'm hoping to get back in it. But the rationale behind it, and tell me if this doesn't make sense, okay? when a stock looks good, we talk about it all the time, forced buying, right? Some people, funds, it's not that they want to own it, they need to own it when a stock looks good. When a stock is coming out, stuck in consolidation or, looks like god awful crap and catch it and gets tattooed, yeah, that's not forced buying, right? That's not forced buying. Like that player's got conviction to buy that. If it looks like, you know what I mean? So that's the rationale behind it. Because, we'll see sweepers all the way up, like an AMD gets hot and is up 10 straight days. We still see sweeper activity. And sometimes when the hedge funds are chasing, we see size. That doesn't matter. But that's more forced buying. So that's my rationale. Throughout my, the whole time I've been trading on sweeper activity, my best trades are always the ones that come to me. Always. Sometimes, I never heard of the name like SE. I don't even know what they do, like Trip the time they were buying it. Right? I don't care how much time you have. Who the hell wanted to buy Trip at that point, even with time? Yeah, and they're the best risk reward, right? You're buying it when sentiment's washed out, and really the only thing on the bullish side of things is that one sweeper, it's not one sweeper. The best flow, they tattoo it, and they're buying, look at the VIPs. They hit it hard, no? They still hit it hard today. I threw it on the top bet list. Look. Here it's on the bottom. Oh, come on. Here's VIPs today. It caught more than this today, right? You guys know. This is just some of the opening activity today in VIPs. You know what I mean? So that's why, Joey, to your point, I let the action come to me, and then I'll start looking at secondary stuff like that. By the way, Micron, Ryan, I can't blame you. Again, your risk is, in my opinion, market risk from all the noise out there. That's the risk. But that stock already got beat up, right? It doesn't have to go down with some of the hotter stuff out there. It doesn't have to, as we saw today. Right? The market didn't do anything today, and that stock had a big day. It's funny you mentioned that Viacom. That's a name that I wanted to own. You got earnings that are going to get in the way a bit. I don't know if you're in it just for a trade or not. May 6th. But if it does, I mentioned this already to you guys. If Viacom hangs around here, like if Viacom's down off earnings, that morning or whatever, you got a fire there. I'd probably give it a minute to see some sweeper activity to confirm it. Again, I'm saying if it's still here and down off earnings. But yeah, this is kind of the VIP setup here. Yeah. Good spot, got whacked. And the thing is the flow, it's the flow. So the only problem is you have earnings there. That's the issue. You have earnings a week away. But yeah, there were a couple of sweeps there today. Had some nice momentum earlier in the day, Viacom, and then fizzled out. Over here. It had some juice as they were buying it. And, the difference in the flow too, Viacom, if you remember early on, we saw some size buying with time. Like to me, that was the real buying. This is more earning stuff, in my opinion. We're seeing more earning stuff come in. But it did catch real buying initially with VIPs around the same time. Wish caught another bet today, December's. JD caught some nice action today. Earnings, May 14th. Here's the space action we were talking about earlier. They hit all sorts of lines there. This was one of the main focus lines, the May 7th. And you see earnings? You know, so the majority of the sweeper activity caught earnings. So that kind of confirms that, you know, whether it's shorts or bulls playing for a squeeze, they're playing that squeeze earnings run up. But you guys see it. Look at the flow. Like today, there were some nice orders. The flow was a mess overall, right? We saw block put buying, protection, and, you know, there's some decent orders out there, but, you know, it's earnings season. You know what I mean? If you see these type of bets post earnings, you'd be a lot more excited. JP Morgan caught a nice leap bet. That's post earnings. Bank of America, post earnings, nothing huge, but a clean sweep, November's. TRQ we spoke about, they have earnings. Micron continues to catch action. They're done with earnings, but you got to bob and weave, as we said, some of the chip stock earnings. WDC is probably the one you're going to watch out for. I told you guys, sorry, I remember a couple quarters back, I think when Micron just started to catch flow before it ran, and Micron caught missiles. It was post earnings. And then WDC reported. And it took down Micron with it right after the flow, a few days. But then they came in and they bought the living daylights out of the pullback. And it ended up going higher anyway. It just took longer time. But the point of the story is it had a short-term impact on it, you know? Right. So that's something to keep an eye on here now. And plus here, Micron, where they initially hit it, was it off that niner? I don't remember where the initial action came in over here. But, you know, you don't want to chase too much green if you don't have to. If you're not in it already, I'd probably wait for a tug. Maybe you get it off WDC. And, you know, WDC is another name to watch. You know, if it's down off earnings, I think it's viable, especially if there's flow. You know, there's a lot of demand for these names. There's a lot of demand. You know, the uptrend may not be as clean. It probably won't be from here because they've been moving. You know, so it'll be messier like we're seeing now. But, you know, if you buy dips, you can get rewarded. You know, like here's the example we've been using, right? Like look at MasterCard. Hasn't been the smoothest ride, right, Ryan? This MasterCard. But, you know, net heading in the right direction. But it's been a bumpy ride. Like, look what you would have had to sit through here. You know, with time, it's possible. But, you know, this was a nice shake here. Probably an even better buy, right? They hit it right here again. They bought every dip in this thing. So watch MasterCard off earnings. This is another one. There's so many names to watch off earnings, guys. So many. So many names. GM, yep. I would watch it off earnings. You got earnings coming up soon, right? Let me see. May 5th. GM looks good. I remember we were looking at it. It might have been you, Robert, asking about it last week. You had the niner here. Now you got a nice little bounce. But I don't know what you want to do with it. You got earnings in the way. I don't know if you're in it already or, if you're not. Yeah, if you're not in it, I mean, unless you're going to play an earnings run up, but it's tough. That's what I was going to say. If you caught this move, I'd probably trim and wait for a dip. Maybe you get it off earnings. Yeah. So you got it right off that niner, huh? Look at you. Who asked that? Who asked about SC? Son of a gun. How is SC? You guys do it purposely. You think I haven't caught on to this shit? SC, look at this stuff. It really is amazing. It's amazing. Amazing. SGMS. Wow. Couple of you guys caught this move. That was nice. Big roll up there today. Here's the roll. Big roll today. Big guy. What would be the easiest way to go here? SGMS. Where's Steven? You still out there? Oh, there he is. What do you really need, Steven, for it to be like for you to get excited? I wish I was still in with you. You know that? I really do. Just to root it on. It counts, right? Are you in the leaps or are you in the stock? Are you in leaps? And you probably rolled. Ah, all right. So this is what this big guy did today. He locked in the May 50s and he rolled up to the July 65s. And I got to look at the rest of the flow, but off this, he pocketed $1 million. So it was kind of a profit-taking move ahead of earnings, May 10th. But yeah, me and Steven, we have a story behind this SGMS. You guys probably heard. We got caught in this thing. We got caught in this thing when it starts with getting buried. Yeah, when the cyclicals, look at this. Oh my God. You know what? It felt more painful than it even looks. This is not it. Where is it? No, wait. Yeah. Wow, back here. I can't even go into it. That's so long ago. Anyway, when the Fed was tightening, they buried this thing. The cyclicals in general just got buried. Every day, this thing went lower, and it couldn't catch a bid right for the life. I've never seen anything like it. It just kept going down. Insiders would come out buying the living daylights out of it. Oh, that's great. Sell it. Went lower the next day. Nothing could get this thing to show an uptick. And it was because the Fed was tightening and the algos were just selling every cyclical play. It was like a SPAC. It was. And now cyclicals, they're the place to be. So now, you got an uptrend here. And you know what's funny? You're probably thinking, oh, this thing was a dog. This thing was such a great stock. I made money with it a few times before losing money with it. Like, look at this run. Monster move. You know what I mean? Look at this. So this thing, it was like right here, right? It got hit off, it got hit with the cyclicals, and right, you think it bottom here? Look at it. It just bled out. Well, look at the up move prior to it. But yeah, so it's in favor, it's in vogue right now. Just don't hold it when it's out of favor. Be ready to clip it. 2018, Jesus Christ. 2018, yep. And Stephen, this is what we were looking at recently too. IGT was the other stock, remember? IGT is the other stock. They caught a little bit of flow, but that's what we were saying, this thing should be, I guess this is as good as IGT is going to look, but there's been some buying in it. Nothing huge, but there's been some bull flow. But yeah, if this thing can't go higher now, it'll never go higher. It's a tough name. It's just a tough name, right? Like you got to be in it for this because you get caught in these webs. Tough. Really tough. All right, did everything on the top bet list they covered here? Oh, I went to SGMS. Hold on. Let me just see if there's any more. Viacom we spoke about. JD, Wish. Yeah, I think we covered them all. Anybody have anything else to add or any questions, sentiment or anything? Yeah, Sharpies are dead neutral still. PLTR, that had a little bit of squeeze flow while they've been squeezing these things. I thought it moved more than this. I didn't play it. You know what it is with this thing? There's too many hands involved in this thing, Robert, Meaning that it's a crowded trade. And when it's crowded, you get a lot of this, what it's doing right now. Yeah, that's the problem, riffraff. You need news. What you need, I don't know if you're holding it longer term, you need them to knock the cover off the bull earnings and you get some short covering and then you could get a decent move out of it. But otherwise, every pop, this thing runs into some sellers, It's tough. Yeah, and, I don't know if it's a market-making thing. It's just, again, look, right? When you get a move like this and the whole freaking social media universe is talking about, this is the best thing since sliced bread, this is what happens. It's going to wear them out. Every time I go on Twitter, I see people talking about it. Oh, just hold on. Just hold on. You know what I mean? So it's got to wear them out. God forbid it breaks down from here. They'll be suicidal. You'll wipe out the rest of the bullish riffraff. You'll wipe them out in one shot. Because they're all in this. They're all in this. So it's just tough. There's too many other names out there right now, to focus on this name. Besides maybe quick trades here and there. Another one that was similar to it, but I think has washed out some of the sentiments is Fubo. Because this thing's been a dog. Everybody was gassed up on this thing. Everybody. I told you, social media here, off this, right here. It's a screaming buy off this pullback. Has no business pulling back. This is a pullback. You guys have no idea what can happen to you. So this really wiped out some bulls. And now, may do what PLTR is doing. Hang around here a bit. Might hang around here for a bit. They're tough trades. All these riffraff specials. Aunt Jemima. They're tough. I don't like these names. You guys know. I don't like these noisy names. You want to find if the spec action comes back, the growth names, you want to find the next Aunt Jemima, the next Fubo. You know, that's where the money is. And then you find a way to be patient and hang on to it. Yeah, Baba caught some action too. Only problem, it's earnings related. That's the only problem. But Baba's at a decent spot, you know? If it wasn't earnings, if you like Baba, it's worth a shot. But, well, earnings, when's earnings? This week? This week or next week? April 30th. No, XXXI was pumped off that news, MGR. Biden's going to get rid of menthol cigarettes. That's what lit the match. So this is not like Fubo or PLTR. You know, the Fubo PLTR that manifested for months upon months. Kathy buying the daylights out of it, you know. That's what I'm saying. There's so many bulls that got in it. That was going on for a long time. It wasn't like it ran for a week and lured in some bulls. Going on forever. So that's why, you know. What other names we got? PBR, they have earnings. Energy, these energy names look interesting. They look interesting. You know, me personally, if you're not in them yet, I would wait till earnings just to be on the safe side. Or buy some now and then leave some room to buy if there's earning weakness. But they all look decent. You know, they all look decent. Let me try it again. Slob had earnings. It wasn't much of a reaction there. So that's good. That looks decent, though. You know, they look good. They look good. You just might be a little early. Valero had earnings. That caught some flow, too, pre-earnings. Look, Valero looks good. They all look good. They all look good. You know, they all look good. What was there's a couple underbelly energy plays, too, that look good. They all look good. Again, it's just a matter. Yeah, that's a nice little tuck-away name. Oh, I didn't see that the last couple of days. This is a nice little tuck-away lotto energy play, this Tell. Caught some flow, too. Earnings are what? May 12th. RRC, AR caught flow recently. I think one of them reported. No? RRC reported. AR tomorrow. Okay. They all look decent, guys. They all look decent. You know? You might be a little bit early, but if you're buying with time, maybe, you know, it's worth it. Otherwise, I buy a little, and then if you get the dip, or wait a bit and buy the other piece. They look good. SM, I was just gonna say that's a red hot energy name. Look at this. Look at this. Whoop. And not much selling here either. Look at that. Yeah, this was a big momentum energy play when they were hot. Yeah. I guess depending, at least 3 to 6 months out, at least. Yeah, I rarely swing anything less than 3 months, calls wise anyway. You know, and it's not that I hold them that long, you know, but it allows me to buy more if I'm looking to do it it allows me to be early and still have the conviction. You know what I mean? That's what it allows me to do. The shorter term stuff, you know, to me, that stuff you use stop losses for, you know, like it's a different risk reward over the short term. You know, longer term, you're looking for, you know, a better risk reward there. So you're going to be more patient. But yeah, 3 to 6 months out, you start there. That's good. And you'll see, you become more patient. And, you're going to have more winners than losers. That people, they get involved in these weekly shit. That's not an easy game, man. It's not an easy game, weeklies. One little misstep in weeklies. Think about it. One little misstep. You're going to down open for some reason off whatever. You're done. Well, you're not done always, but you're behind the 8 ball. Weeklies, even 2 weeks out, you're rolling the dice. But you start playing stuff 3 months out at decent spots off solid action, and I'd be shocked if you're not cashing in more tickets than losing in bull markets, especially. In bull markets especially. Well, people get greedy, they get cute. They want the money and they want it now. I want the money and I want it now, damn it. Yeah, you could hedge. It gives you other options, Jay. You know what I mean? You got other options. The other stuff is more, I guess it's more trading, It's more trading. Like that's why, like for me, like trading, when I'm day trading, it's like, the risk reward is 1-1 a lot of times for me. It's like placing a bet on a ball game is how I approach it. That's trading to me. I don't have the utmost confidence in my trading skills. There's too much emotion involved. What else? Anybody? Yeah. Well, if you're playing weeklies, you're a degenerate gambler. I mean, come on. That's an easy admit. No? Marvell. What does that look like? Let's see. Marvell. That looks pretty good. When they're done reporting, right? Marvell looks good. Looks good. They had that acquisition. It kind of got them stuck in mud a little bit. But I'm sure it'll get back on track. Not like it hurt the stock much. This thing's a stud, Marvell. TXN reported. This is the beast of the beasts. Yeah, it's that you're talking about STPK. Oh, that's a SPAC. I remember that. That was a huge winner for us. I think, was this the one? This was my biggest SPAC. As much as I talk bad about SPACs, this was my biggest SPAC winner. I think it took 2 days, this STPK. And supposedly this is quote unquote a real SPAC, right? Yeah, well, there's quite a few people who consider this legit, Bill. They consider it legit. Right. That's the truth. The only real SPAC is Playboy. You're right. Oh, my God. Come on. I didn't even play this. You know that? I didn't even play it. Some of you played it, at least. I didn't even play it. Off those sweeps. Yeah. We should have played it. You think? I mean, the flow was right in front of me. The sweeps were good looking. It was just a SPAC. And you hear the way I talk about SPACs. So I couldn't do it. I couldn't do it. I mean, with everything that was going on in SPACs, they were getting annihilated. You know what I mean? There was not a thought in my mind that this thing was going to be the only huge winner in SPACville. That's how I felt, Tone. You know, it was the only winner in SPACville. Do you understand that? And not only that, it was a big one. Yep. Nuts. Later, Robert. MUDs, that is the non-fungible token pump. You know what's going on there? You want me to tell you with a straight face what's going on in this MUDs? What's his face is getting drafted. The kid from Clemson, the quarterback, and his NFT and Trevor Lawrence and his non-fungible token, whatever the fuck that means, is coming out today. He's dropping his non-fungible token today. That's what all the excitement is about it. I posted the article. Yeah, Tops. It's Tops thingy. I'm like, I guess I'm a boomer, is right, but I can't. I don't know. Don't get me started. All right, but that's what's going on here. Even without Tops is doing well, you mean, Dean? Oh, yeah, maybe, right. Yeah, because the cards. Exactly. Good call. You're right. But I'm saying this was the news that was the last couple of days here. And the sweeps. Yeah, this already had quite the move, right? I don't remember what they were sweeping here. Let's look at it. I didn't play it, if you're asking that. I didn't play it. But let's see. MUDs. Oh, man, it's 6 o'clock already? I could run my mouth forever, right? I mean, I can run my mouth till I run out of saliva talking flow and markets here. MUDs. So here are all the sweeps. These are today. Where was yesterday? I'm just curious. Oh, not yesterday? Oh, that was the initial news. This Whitney Tilson was one of his picks on the 22nd. That's where they started buying it. You know, so well, look at the move already. It's a big move. So they started buying it in this vicinity here. Wow. Yeah, but you know, this is something can get chaotic, I guess. I don't know. You're asking the wrong one about this crap. I don't know. I really don't know, you know? I don't know. All I can tell you is about the flow. You don't want to ask me about what's going on with the name. I have no idea what this shit is all about. The sweeper activity, they, you know, was nice looking sweeps. Look at some of the sweeps they hit. Look, October's. This is, oh, wait. There's a big one somewhere. Is this it? Yeah. You know, this is a legit sweep. Legit. You know, it's not something they're just buying on the hype. You know, they're buying with some time. They want it to be in the name. You know, even these smaller lots. I mean, you want to see that they go out with time. So, yeah. You know, it's already had a move. If you're asking from here, I don't know. Maybe and that's good news, though, what they're saying, all kidding aside, that you got something else besides the Clemson quarterback non-fungible token as a catalyst because, you know, but Tops cards are red hot right now. Yeah, a lot of Viacom. Tony, we spoke about it a little earlier. Maybe you weren't around. The only thing I would say about Viacom is you have earnings coming up. There was some good-looking Viacom, as you probably remember, Tony, when they were buying the VIPs with some time. Okay, so it did catch some good-looking action when they first started buying VIPs. But today's action, you had a lot of May action, and let me get this off. You got earnings coming up here, May 6th. So maybe I'll squeeze ahead of it. I don't know if you're playing for earnings, right? But if it's still here post earnings, we were saying that it'd be a really good setup. Yeah, I could definitely see that. There's a couple of them. If the market, we got the Fed tomorrow, right? If there's nothing major out of Fed and earnings, like if it's just same old, you got a lot of these plays that can squeeze ahead of earnings. Space, Viacom, a lot of these names, if the tone doesn't change off of earnings in the Fed the next couple of days. So something to keep an eye on. But we might have this trade, this squeeze trade, alive for the next week or so, and that'll be good. But, let's play it by ear. Let's see. All right. Powell could come out tomorrow, rain on everyone's parade, and case is closed. So you don't want to be too committed to much here. Chamath buried everybody alive. No, he sold everything. Not everything, but he sold a lot. Buy space. We're going to the moon. Buy space. Buy more. Chamath sell space. Chamath sell space. In the same breath, he was telling his riffraff followers to buy space. He was selling the stock. Can you imagine? Can you imagine? Like even if that you didn't do it in that way, like you just right, exactly. You just can't. It can't look like that. You can't do that. A guy of your caliber. You can't get people hyped up on GameStop and then you go buy calls and you sell them for $100,000 profit. $100,000 is like $1 to you. And you flip your calls while you're telling the riffraff to diamond hands, hold the line. Right? Like you couldn't even hold your calls like a little pica where it means nothing to you. But you told all your riffraff followers hold the line. Come on. That's not right. Hold those calls. Let them go to zero with everybody else. Whatever. Yeah, Biden too, right? We'll keep an eye on that. I'm sure they're going to be interested in the tax rhetoric, You may see some selling in some of recent winners. So that's what I mean, Jason. There's a lot of balls in the air the next day or two where we got to take it easy, Take it easy. Be smart and take it easy. All right, guys. I'm starting to lose my voice. Let's wrap it up. As always, I appreciate you guys coming around, sticking around. All right, good luck the rest of the way. Should be a fun day tomorrow anyway. Yep, you too, guys. Have a good night.